What the did the Fed just do to the market? Have you heard the news? The Fed just did the biggest interest rate hike since 1994. That's right, 1994, aka the same year that the zip drive came out.
Is that a zip drive on your desk?
Yes.
Am I showing my age? Yes. Anyway, with this interest rate hike, you would assume that we are in the end times right now.
We have to sell everything.
Largest
Bonds,
interest
stocks,
rate hike in
because
nearly
he's
3
The hope is
decades.
that by raising interest rates, they'll slow the economy.
The need for a 75 or 100 basis point move.
The Fed, inflation, interest rates, basis points, what does it all mean? And more importantly, how does it affect you? Because let's be honest, that's the question that matters the most to you. I mean, we're not selfish, we're just curious. Yeah, that's it. Okay, let's dissect this thing like a frog in 8th grade science class. And let's start by answering the question, what is the Fed? Well, the Fed is the Federal Reserve, or the Bank of Banks, the godfather of US banks. Basically, the bank to the US of A. They manage the US money supply, they regulate financial markets, and they set interest rates. All the banks you know and love, maybe love is too strong a word, all banks you know and tolerate borrow money from the Fed. And the interest rate that they borrow from the Fed determines, in turn, how much they will then charge you as you borrow money from the bank. So then what exactly is the interest rate that they raised? Well, it's the interest rate of interest rates, the master rate, the rate at which banks borrow from the Fed and then pass along that to you. For example, if your neighborhood friendly Chase Bank, and yes, I'm being very generous here, borrows money from the Federal Reserve at one interest rate, well, then you can guarantee that they are going to charge you a different, higher interest rate if you borrow money from them. If the rate from the Fed goes up, well then so does the rate that you borrow from a bank. And well, that's exactly what happened. The Fed just raised the interest rate by 75 basis points. Ooh, 75 basis points. Scary sounding.
Mom, can you pick me up? I'm scared.
But what the heck does that actually mean? Well, scary term with less scary implications. Each basis point is actually 0.01%, so 100 basis points would be 1%. So that means that a hike of 75 basis points is actually a hike in the interest rate of 0.75%. Now, since that's the amount at which they are raising the interest rate, that means the current interest rate is actually 1.5 to 1.75% right now. But that's just what they're doing so far. The Fed has said that they are likely in July to raise the rate again by 50 to 75 basis points, or 0.5 or 0.75%. Now, they will keep doing this until they're satisfied with the results. By the end of the year, they estimate that the overall interest rate will be roughly 3.4%. Now, why do they try to confuse you with basis points or any of this jargon for that matter? Well, confusion means you don't understand it and won't hopefully ask a lot of questions. And then as a consequence, we all just blindly accept whatever they tell us. They want us to be good little consumers who don't ask too many questions.
I've stumbled onto a major company conspiracy, Mac. How about that for stress?
Okay, so why did they actually raise these interest rates? What is the point of doing that? Basically, it works like this. If you lower the interest rate, you speed up economic growth. And why is that? Because when money is cheap to borrow, it moves through the economy freely and quickly. But on the opposite end, when you raise interest rates, you slow down economic growth. And why is that? Well, because the opposite is true. One, it can pay you more to just hold on to money, but two, when rates are higher, people are less enthusiastic about borrowing to infuse it into the economy. We've just had an incredibly crazy period of economic growth in the US because of large injections of new dollars and all the stimulus, which led to new all-time highs for stocks and crypto and real estate. Wasn't that a bunch of fun? Do you miss it already? Now, though, we are on the tail end of that, and we are in a bear market. And with all the prices correcting, some are also worrying if we're headed for a recession or not. You know, some people just want to kill the vibe. So the Fed is trying to slow inflation and hopefully stop a recession with these interest rate changes. Ideally, the Fed wants the inflation rate to be between 2 and 3%, but right now it's at a whopping 8.6%. Now, if you don't know what inflation is, well, then that is really a pretty big topic for another day in another video. But the ultra short explanation here is that your dollar buys less than it used to. Once upon a time, you could buy a Coke for $1, and now that same Coke costs $1.50. movie. Or you could buy a plane ticket to Germany to go to the Destination Star Trek Germany convention and hopefully and finally meet Captain Janeway, or at the very least meet Robert Picardo. But that plane ticket that just a couple years ago would have cost you $1,000 now costs $1,400.
Oh, wow.
That's inflation. And a big old Star Trek bummer. And really, inflation is probably much higher than 8.6%. But the way that they calculate inflation is completely arbitrary and doesn't really reflect reality. For example, it doesn't include things like house prices. What? Okay, so you got all that stuff. What happens next in this whole equation? Well, we're kind of already seeing what happens next. Doom and gloom casts its dark shadow across the valley of prosperity, and stocks and crypto take a dive. Now, this is pretty normal as we are exiting a highly bullish environment, and now sentiment has changed dramatically and people are less likely and less willing to invest like crazy, which is a shame, honestly, because I believe this is the time to be investing, in my opinion. Okay, so how does this affect you? Because I'm sure this is what you really want to know. First off, mortgages are going to cost you more. In this past year alone, there's been a 47% increase to mortgage payments. According to Redfin, 1 year ago, the average mortgage payment was $1,700 per month, and it's now over $2,500 per month. Also, the median new mortgage overall loan amount is at an all-time high. Now, the good news here is that house prices are actually slowing down, and maybe we're going to have a bit of a correction. So while your mortgage rate might be less favorable, at the very least, maybe your overall home costs will be more reasonable. So that's kind of a silver lining, I guess. Next, credit cards are going to be more expensive. Banks have to pay more for the money they borrow, so you better believe they're going to charge you more for the money you borrow, especially for something that's as easy to use and borrow with like a credit card. If credit card rates weren't already scary enough, they are about to put on their Jason masks and start chopping away. Crypto's also going to be really rough. As much as everyone loves to say that crypto isn't actually correlated with the stock market, in reality, it is. One day when crypto is big enough, it might not be correlated anymore, but for right now, crypto is still largely in its infancy, and so when stocks go down, crypto goes down. So overall, markets are likely to continue to fall or at least stay sideways. But don't lose hope. This can all actually be a good thing, especially if you put that 200 IQ big brain energy to work. And how, you ask? What can you do? First, look at your overall finances and make an assessment. You need a battle plan. If you have outstanding debt on high interest loans like credit cards, well, then you might consider attacking those. I'd also consider saving some cash. If things get worse and you have cash available to take advantage of lower prices, or at the very worst case scenario, you lose your job or something, then cash might still be king. This could also be a fantastic time to be investing. But don't listen to me. I'm just a guy on the internet. But I am buying right now. I'm buying in big chunks, and I'm doing a constant dollar cost averaging strategy. I believe all these prices will look criminally low in the future. Crypto, in my opinion, is a massive opportunity, especially right now. If you believe that as well, then you should watch this video, which is a very important note to crypto investors. Otherwise, I will see you in the next video. Goodbye.